In May 2025, news broke in Australia that the government now treats Bitcoin as money. For Australian Bitcoiners, this changed everything because if the ATO classes Bitcoin the same as currency, guess what? No capital gains tax. But there's more going on here than the headlines would have you believe. So in this video, I'm going to break down the controversial ruling, clear up where the ATO actually stands on Bitcoin right now, and show you the tool I've built to keep you on the right side of the tax rules, even if they suddenly change. Plus, I'll debunk some of the common misconceptions around owning Bitcoin and crypto in Australia to help you better understand the rules as they stand today. First, some background. Since 2014, the Australian Tax Office has treated most digital assets as a capital gains tax asset. If you sell, swap, or spend crypto, that's usually a CGT event. For example, buy $20,000 worth of Bitcoin and sell for $60,000, that $40,000 gain is subject to capital gains tax. And if you hold for more than 12 months, you may be eligible for the 50% CGT discount. Income like staking rewards or airdrops is typically accessible when you receive it, and later when you dispose of those assets, there's a CGT outcome as well. In May 2025, a Victorian criminal case described Bitcoin as money. That surprised a lot of people because it clashes with the ATO's long-standing approach that crypto is property and therefore a CGT asset. Naturally, the question popped up, could this mean no CGT on Bitcoin, maybe even refunds? But here's the nuance. This was not a civil tax case, it was a state-level criminal matter. Different context, different weight. It doesn't automatically change federal tax administration. It's also under appeal, so we don't even know if the reasoning will stand up in higher courts yet. 4 fast facts to keep in mind. First, a state criminal decision doesn't rewrite national tax law. Second, it isn't binding across Australia for tax purposes. Third, it's under appeal and may be narrowed or overturned. Fourth, the ATO guidance remains unchanged. Crypto is still treated as a CGT asset today. So if you're lodging a return, you must continue reporting according to current ATO rules. Even if nothing changed today, the case highlights a bigger reality. Rules can shift quickly. If higher courts or parliament later confirm a Bitcoin as money view, the treatment could change fast. And if your records are messy, especially with dollar cost averaging, frequent swaps, and staking, trying to reconstruct cost bases after the fact is an absolute nightmare. Don't do that to future you. Let me explain with some examples. If we open up Navexer and take a look at this Bitcoin holding, we'll jump across to the Trades tab. You can see we've got a whole lot of trades in here. Every time you trade crypto for another crypto, it's a CGT event. So in this case, we traded some of this Bitcoin holding for Ethereum. That triggers a capital gains tax event. Then later up here, when we traded back in from Ethereum, that's another CGT event. If you've also been dollar cost averaging or buying into the same crypto multiple times, each one of these trades comes with its own date, its own price, its own quantity, its own fee, and its own cost base. So when you go to calculate the capital gain event on some of these CGT events, you need to know what the cost base is because, for example, when this Ethereum record came in, you need to be able to calculate whether it's a capital gain or loss based off all the trades you've done before it. So that's why keeping these records super accurate is critical in making your tax return accurate for the ATO. Here's your 4-step plan until the appeals finish and the ATO updates anything. Step 1. Keep reporting crypto under current ATO guidance. CGT still applies. Step 2. Centralize your history. So pull everything from the exchanges, wallets, and the on-chain activity into one system. Step 3. Backfill gaps now. Export CSVs and statements before platforms change formats or shut down. And step 4. Use a tracking tool. I use Navexer obviously, so you can pivot quickly if legal interpretations change. But 3 signposts are worth watching for. First, the appeal outcome. That's the big one. Second, any ATO statement updating guidance. Third, possible legislation clarifying crypto status. If any of these move, tax treatment could update, but not retroactively guaranteed, so keep your records bulletproof. Now let's clear up a few common misconceptions, because if you get this wrong, it can cost you big time. Misconception 1, Bitcoin is tax-free if I don't cash out to dollars. Not true. The ATO says selling, swapping, or spending Bitcoin is a CGT event, even if you never touch AUD. If you swap Bitcoin to Ethereum, that's taxable. Buy something with Bitcoin, taxable. Misconception 2, if I use a crypto debit card, I avoid tax. Nope, those cards are just automating disposals. So every time you tap, the system is selling a slice of your crypto for fiat. That's still a disposal, which means a CGT event. Misconception 3, the ATO can't track on-chain transactions. Absolutely false. The ATO has data matching programs with Australian exchanges, plus blockchain analytics tools. They've issued thousands of letters to taxpayers reminding them to declare crypto gains. So if you're assuming they won't see it, you're betting against the house. Misconception 4, if Bitcoin becomes money, the ATO will refund my past tax. Unlikely. Tax law changes generally aren't retroactive unless Parliament specifically legislates it. So if the treatment changes tomorrow, it won't rewrite your previous returns. So if you've heard any of these myths, you now know the reality. Crypto is taxed today under current ATO rules, and you need to track every transaction until that changes. This is why, while it might be convenient or exciting to believe that the Victorian criminal ruling has suddenly changed the Bitcoin or crypto rules in Australia, the reality is that the rules are pretty much as they have been since 2014. Bitcoin is not tax-free in Australia, at least not yet. The Victorian ruling stirred the pot, but ATO rules remain. Crypto is a CGT asset today, like property. If you want to be ready for whatever comes next, track everything in Navexa, link in the description. But tell me in the comments, do you think Bitcoin should be treated as money in Australia?